Understanding trading fundamentals and sentiment is one of the most important concepts that a trader needs to understand if they want to become a consistently profitable trader. And in this video, you're going to learn everything about trading fundamentals and sentiment and how to implement it on the charts. Because as a trader, you need to understand why prices are moving in a certain direction. You have to understand the context behind these moves in the market. Why did stocks fall so much at the beginning when Trump was elected? What was going on here? Why did it rally so much over here? And then recently, why did this week it stop making all-time highs and it's completely selling off? Not only just that, why is gold rallying so much? It's at $4,300. It's like an 80% chance of it being a bullish day right now over the last 45 days, up over 30% during that time. What is the economic driving factor? Why is prices moving in this direction? You need to understand this type of stuff and not just think, oh, it's doing this because we're reacting off of support with a liquidity sweep sitting inside demand. This isn't why prices are moving. And if you're going to become a professional trader, you have to understand the fundamentals, the sentiment, the context of what's driving price action in a certain direction. And today, that's what you're going to learn. So let's talk about this type of stuff. And I want to first break down a trading edge and what's going to consist of fundamentals, sentiment, and what people are looking at when they talk about technicals. And then I'm going to talk about what is CPI, where to get this data, how to interpret it, and how to implement it on a chart and implement it into your trades. It's only going to take 20, 25 minutes. It's the video that's boring, I know, but it's honestly one of the most fascinating things. It's very confusing early on. But if you're going to make a serious career out of this, you need to understand fundamentals and sentiment. Okay, you have to understand this and be able to tell someone about this type of stuff. So let's talk about the fundamentals. What's going to consist of fundamentals? And this is why I think one of the best things a trader can do is actually pick up a book on trading economics and fundamentals, because a trading guru is not going to talk about this because it doesn't get views. All right, they strictly talk about technicals. I mean, you look at technicals, this is what people are mainly going to talk about because you can advertise, oh, when you have this, A, B, C, then 70% of the time X, Y, Z happens. It's very easy to implement on a chart. But the problem with the technicals is your edge is very small as a trader. So when people talk about technicals, they're talking about indicators, SMAs, moving average, volume, anchored VWAP, I know some people look at. I don't know, stochastics, like all these indicators that consist of technicals. Also, general price action, pivot points, highs, supply and demand zones, chart patterns, engulfing. Like this is what people are talking about when they're talking about technicals. This is not why prices are moving in a certain direction. We can use them as entries, but you need to understand the context of why prices are moving in a certain way. And if you strictly rely, very important, if you strictly rely off of technicals, yes, you can become profitable, but your edge is going to be very slim, okay? Don't expect a 75% win rate, or trading purely technicals, getting setups every single day, okay? There's context, and so that's why I say there's four things to an edge. There's technicals, there's sentiment, retail sentiment. Are the retail traders buying or selling? What are the institutional traders doing on the COT reports? I made a 45-minute video talking about this, breaking down these COT reports. Are they overall long or short a certain asset? Are they adding to their longs, adding to their short positions? This is what drives price action in a certain direction, okay? These guys are typically on the right side of the market, so people will look at these COT reports to understand, are they taking profit? Are they adding to their longs? What's the overall trend direction? Are the fundamentals backing this type of stuff? And you'll feel a lot better knowing that you have these types of trades and this type of information on your side. So that's COT reports. I actually made a 45-minute video talking about that. I will put it in the description below. It's one of the things I use every single day. But let's continue on, and then general market consensus, geopolitical events, election, wars, trade deals. Okay, this is little sentiment type of stuff. And we talk about fundamentals. This is what's the type of stuff that's going to be driving it long term. Earnings reports. What are the stocks reporting? Are they growing as a company? Are they decreasing? All right, what's their earnings per share? The quarterly GDP. Is the overall United States economy growing right? The quarterly GDP. Well, that's a good sign for the United States dollar. Okay, how might that impact gold? How might that impact the stock market? How might that impact other foreign currencies? What about CPI? The inflation data that comes out every single month. Is the cost of goods and services increasing or decreasing? Retail sales. Are people spending money at retail institutions or retail stores? Well, if they're not, that's a little bit concerning for the economy, don't you think? That's not really good. If people are not spending money in retail sales and retail sales are dropping, they're not seeing as much traffic coming into their store, so they're not making as much money. Maybe these people don't have as much money. Very important to understand. Central bank rates, are they increasing rates or decreasing rates? What cycle are they on, right? And so right now they're trying to cut rates. Well, what does that mean for the United States dollar? Well, that's not really a benefit thing for the United States dollar. To be decreasing your rates, that's the problem. They're decreasing their rates and then going to go into quantitative easing and print more money. The government shut down right now because they want to spend more money. Okay, they're going to pass some $1 trillion spending bill probably again. What are the central banks doing? The Fed doing? Are they increasing rates, decreasing rates? And then, of course, geopolitical events, elections. Japanese yen just came out with a female president. What does that mean for the Japanese yen, right? So we look at the Japanese yen. Don't worry, we're going to go all over this type of stuff. The Japanese yen has fallen this entire time last week. Well, why was it falling? Well, they elected the first female president. I'm not saying that's why it fell, but what's her policies behind that? She wants lower interest rates. She even said, I want to lower interest rates really bad. I want to go into quantitative easing. She wants to print more money, right? And so it's the policy shifts that why the Japanese yen is falling so much last week. All right, this week it's catching a bid. Why? Well, maybe because Donald Trump is talking about implementing tariffs and this type of stuff. So this is why it's extremely important to understand this concept of fundamental sentiment and make more intelligent trading decisions. Not, why did this lose? I'm trying to swing short the gold market. Why did I lose? Well, why are you swing shorting the gold market right now? Do you not understand the context behind the market, right? So this is why it's so important. Like the S&P, the stock market sold off Friday last week. Stock market completely sells off. Why? Donald Trump coming out talking about want to implement tariffs on China, about CPI events, not CPI, but sorry, implementing tariffs on China, which would cause the stock market to go down. What did China do then? Well, then they came out on Monday, said we're going to do the same thing. We're going to be implementing tariffs on AI and ore and U.S. vessel tariffs that are coming into China. Well, now that stock market fell. Right? And so this is what's impacting the stock market right now. Not, oh, it's liquidity sweep sitting inside supply. No, these are the reasons why the stocks move up and down, right? The earnings reports have not been very good for the banks. People look at the banks a lot. The earnings have not been very good for the banks. I mean, they've been mixed, some good, some bad, which has people worried, right? Well, if the banks aren't doing good, then maybe I should be looking at moving my money into a different sector or asset, right? So, oh man, I was on a yap fest, but that was a solid yap fest. But this is why it's important to understand the fundamentals, the sentiment, and the technicals. So that's what we're gonna dive in deep. I've already talked long enough about that. Let's talk about like one of the best things I think that you should do as a trader. I think I mentioned it earlier. Pick up a book. Go to your local library and pick up a book on trading economics and fundamentals. It's one of the best things that you can do as a trader. Let's talk about that, about how I'm implementing this on a chart and into certain trades. So let's go to a couple trade reviews. Like a trade like gold. So like gold recently is up. I mean, I have it right here. This trade was taken earlier in the week. I think a couple people in the Moneyball trading program took this trade. Where was this guy? Members watch. Yeah, Tyson's up like 10 grand, 20 grand. Shout out to Tyson, man. You're killing it out there, up 22 grand. I think a lot of your trades were in gold, in this huge rally in gold, so you're absolutely killing it. It's hard to lose money when gold just goes up. But hey, shout out to you, Tyson, up 22 grand on something like this. And I know a couple traders took this long in gold, and I want to talk to you about that. Now, gold, we talk about how we use this in combination and this type of stuff. So your technicals is how you want to approach the market, as in how you deem, an entry, a technical setup. Now, the reason that we really like this buy setup on the gold market is because 29 out of the last 36 trading sessions have been bullish, okay? Every day we've been going up, all-time highs, up 52% for the year. We're up over 20% over the last 45 days. The technicals are screaming all-time highs, continue to buy, but that's the technicals. I'm not just relying off of the technicals because the technicals are still very good. Very good demand zone. Very good demand zone, going over 2 to 1, removing opposing pivot point levels, breaking downward momentum line. It's an excellent buy technical setup. But what's driving this thing overall recently? Now, there's a huge list that I could talk about, but I'm just going to talk about them in bullet point form here. Is the sentiment. Well, we understand when we look at these sentiment reports, if we wanted to look at gold, I mean, I have it right here documented. This is why journaling your trades is important. Look, they've been adding to their longs. So 315K up to 324K up to 332K. So they've been adding to their long position. So institutions, COT reports, they're adding to their longs. Central banks are all-time high buying this thing at all-time records. Countries across the world are buying gold at records amounts. People are seeing inflation rising. They see a potential weak dollar in their purchasing power. And so they're nervous about these tariffs. A lot of countries will not do trade tariffs or will do trading with the United States right now. So that takes money out of the United States dollar because less countries want to do trade with the United States dollar because of the tariffs and what Donald Trump is trying to do. And so that decreases money from the United States dollar and injects it into a safe haven currency, maybe the gold market. All right, and there's several other reasons. If you want to get into other reasons, you could start talking about, well, the amount of demand that there is versus the amount of supply that they're pulling and extracting out of the ground is far greater in the demand side, so which is helping gold and silver to the upside. They're talking about they want a more positive outlook like solar panels, positive EV cars, that type of stuff, phones. All this type of stuff requires gold and silver. And if they're telling people you need to be in a car, in a certain car in 2035, and that car has 2 times the amount of gold and silver in it than what it is now, right? You can understand how, solar panels, making cars, cell phones, it requires this type of stuff. And if this type of stuff goes up, then inflation goes up as well. And so in times like this, people are looking into these safe haven currencies like gold, all right? And so that's why we were seeing a massive rush into the gold market of a lot of people, okay? So it's known as a safe haven. I have right here, fundamentals. What happened? Fundamentally also, Trump is threatening China with tariffs, 100% tariffs on certain goods and services. Now, he came out over the weekend, the vice president came out over the weekend, Vance, and he went on a talk show saying, oh, no, we're not actually going to do that. We're just kind of threatening these guys. I mean, why would you say something like that in a live interview saying we're not actually going to implement these tariffs? We're just kind of using it as a negotiation tactic. Why would you do that? You're just showcasing your cards to the opposite team saying, look, we're just saying this type of stuff. Potentially very manipulative, right? So you can understand this type of stuff that goes on into the market. One day it's on, one day it's off. This is Donald Trump, man. This is how markets move when Trump's in office in the first time. And so Trump is threatening tariffs with China. Well, that's going to benefit the gold market, okay? And so now I have a beautiful technical setup sitting inside demand, valid buy setup, like a high quality demand zone, all-time highs. We're up 52% for the year. 39%, 39 out of the last 45 days have been bullish, something like that. All these reasons, right? Fundamentals, the sentiment, like all these reasons are pushing towards a bullish gold. And so that's why we're a lot more aggressive on these buy setups in the gold market. I think this guy even, Nick, took a buy setup in the gold market. Yeah, we're buying pullbacks in the demand zones, right? So we have all these forces to drive prices up in a certain direction. So I think you guys are starting to understand that, why it's important to understand the context of these markets, about why prices are moving. Another trade that I got into, this was a losing trade. Let's talk about a losing trade, okay? A losing trade was the S&P. I was buying this off of the fact that I knew that Vice President Vance came out in a talk show over the weekend saying, look, the tariffs aren't really going to happen. We're just using it as a negotiation tactic for when we go and meet the Chinese president in Korea for the summit in Korea on the 1st of November. Okay, they're going to meet Mr. Xi Jinping in November 1st or October 31st. I don't know the exact date. Well, with that, I know going into this week, knowing that stocks long term are very bullish, knowing that the Fed is going to decrease rates and inject more money into the economy. Donald Trump's going to push the stock market because he loves talking about the stock market. Anytime it falls, he's talking about how it should be all-time highs. Buy this. He comes out and says, you should be buying the stock market. It's a great dip. And next thing you know, it just starts soaring to the upside. This is type of stuff that you have to be aware of, right? And so I was buying this off of this type of stuff, right? And that's why I bought this. Beautiful demand zone, taking out opposing levels, breaking momentum. It's a valid technical setup. I have a technical edge here. Now, what went against me is during this time on Monday, Mr. Xi Jinping came out and said, we're going to introduce reciprocal tariffs on you. So he came out and said, we're going to implement tariffs on you, talking about tariffs on the vessel and certain AI technology on metals and ore, okay, that's going into their country and leaving their country. There's going to be tariffs on that, 100% tariffs. Well, that's going to impact, NVIDIA and these other tech stocks and AI stocks that build this type of stuff in China. So that's going to impact the stock market, right? So hitting tariffs back, and this is not really good for negotiation. So this is what's going to happen, is prices are going to sell off altogether. And so that's what we've seen in this market so far this week. This is why it's very difficult to talk about saying like, it's selling off, and the next day it's rising, next day it's selling off. It's hard, but this is what's driving the price, and people don't really know what to expect right now. And so right now, long term, yes, I'm bullish to the stock market. I am. But right now, I'm a little hands-off saying, look, there's a lot of fear and speculation right now. I would like to look for buys, but I want to see prices maybe drop down a little bit. I'm not just buying every single little pullback. I think I would rather look for longs maybe in here or in here, right? If prices sell off into these levels, this is when it starts making sense for my technicals to maybe consider getting long, or in here, right? So that's something I would be waiting for. Maybe I'm okay with trying to sell this thing knowing that there's a lot of fear and speculation right now. I'm okay with trying to sell this thing, right? That's an option too. It really depends on how you want to execute a trade like this. Gold. No, we've talked about gold. Let's talk about oil. Oil. Why has oil been dropping? Well, maybe we look at the last couple of weeks. Last week or 2 weeks ago, OPEC, which consists of, I think, like 7 or 8 countries that produce the most oil, okay? They came out saying they're increasing production of oil. Well, if they're going to increase the production of oil, that's going to put a lot more oil out into the market, which is going to push oil to the downside. So you actually got this big sell-off in the oil market, selling off all week. Then it rose a little bit. And then what happened this week? Talking about Hamas and Israel, this war coming to an end. This is a de-escalation of that. So you'll see an impact in the oil market of why this thing is selling off. If oil sells maybe off more, yeah, I would like to look for buys maybe back here into this 50 territory. If prices sell off, Donald Trump wants weaker oil. He says, I want weaker oil. He's been saying that all year since he became president. I want weaker oil. Chances are he's probably going to get it. He wants a weaker dollar. He even says, I want a weak dollar. I need interest rates to come down, right? So you can understand, well, if prices get maybe down into this level, because this is where I deem levels of areas of valid demand zones, maybe levels of this is where institutions were buying a lot last time in 2020. Maybe I need to wait for prices to come down, and then I wait for my sentiment of institutions closing off their short positions, because they're going to be short. This entire time, they're short this oil market. You can actually see this in the COT reports. This is really good stuff. And I know, this is so important if you actually want to make this a living, guys. You need to understand what's driving the markets. You look at oil, they've been actually, where is this? I mean, it's shut down. The stock market, the COT reports are shut down, so we're not going to get this data very well. That sucks. But they were long 300,000, and they've been slowly decreasing them, 297, down to 274, down to 264. So they've been closing off their take profits, not really adding to their shorts, Then again, we don't really know because the government's been shut down for 3 weeks, and so we don't have 3 weeks of data on the reports. But when prices get down to here, maybe I'll look for buying opportunities. Maybe the government will reopen, right? And so this is why it's so important to understand this type of stuff in your trading about what's driving the markets and that type of stuff. Now, you have to be worried on certain things about the context of these markets. Like one of the things that we were talking about in the Japanese yen was how bad it was last week, and we were talking about selling it. And then we were saying like, look, going into this week, this is where we might see buyers trying to step in, because going into this week, we have prices coming into a daily demand zone, okay? We also have prices kind of reacting off of this downward trend line, okay? So this is a time period where I could see where buyers might start to take control. Yes, I'm super bearish the Japanese yen. The new president wants to go into quantitative easing. She wants to print more money. She wants a cheaper Japanese yen. Her policies support that decision. And so that's why we saw this giant fall over the last week in the Japanese yen. Okay, that's why this thing fell off so much. Now, some people might continue to look for selling opportunities. That might be valid, but I think, you basically have a market that's like this. You have a market that's like going down, lower low, lower high, lower low, like this. The time to short, is up here. If prices return, that's the time you would want to be selling. This thing is like lower low, lower high. We're kind of reacting off of supply. This is the time that I like for shorts, or here, or here, or here. Not when it's down here. It's like, wow, this thing has just been falling all week. Now you want to sell this thing? This is a location of, based off of technicals, well, you look at the average imbalance, it's like down 2.5%, down 2.5%. Well, now price has just made a 2.5% move. This is a time period that you could start to see this thing start to rally, right? And that's why it's been in our watch list this week saying, look, I like it for buying opportunities. Now I'm not going to participate in this. I'm still short bias. I would like to see this thing roll off and continue to sell down, or pull up to here and then continue to sell down or look for selling opportunities. Yes, you could look for longs, and I think this was the long setup that we were talking about from this, and valid buy setup, beautiful demand zone, confirmation, but it's very aggressive, right? But we're playing the corrective move. I'm not interested in that, but that's a way that you could trade it. But you need to understand the context, and I see that a lot of the times when traders are taking them, and I see it in a range-bound market or something like that, or lower low, lower high, and now they want to sell this thing after it's made a gigantic move. It's like you got to start factoring in these different things if you want to really create a positive edge. And you might have an edge, but this is why like you have to learn when to avoid your trade setups in your trading strategy. You know what I mean? And so sometimes it's just good to avoid setups like this. So I want to talk to you about where to get this news data from and how to interpret. Now, I think I said it before, one of the best things that you can do is read a book on trading economics. Go to your local library and pick up a book talking about just trading economics and fundamentals. And that will break down, a couple pages each. What's GDP? What's CPI? What's retail sales? That's one of the best things that you can do. Now, if you don't know what that type of stuff is, just Google it. But you can also go to this website. I'll have it in the description below, News Squawk. And you can use it right here, right here, how to trade the news events. And it will line up saying like what's NFP, what's non-farm payrolls, what's CPI, Fed rates decisions. And if you click it, it will explain to you what each news announcement is and what is a positive announcement and what does that mean. What is CPI? How does it affect the gold market? How does it affect the stock market? That type of stuff. And it's kind of the same thing. Pick up a book on that type of stuff. You could use this website. Also use forexfactory.com. I changed this to weekly settings, but I always look at the red settings, but also the yellow for the day-to-day action. I'm most concerned about the red news. This is going to have the most impact on the individual currencies or market that's coming out. Okay, so like on Tuesday next week is going to be the Canadian news, CPI. That's mainly going to affect the Canadian currencies. And so if I know long-term I'm bearish the Canadian currency, I'm sitting inside supply, I like selling the Canadian. So I'm going to lean towards probably a higher print of CPI inflation, which would not be benefiting the Canadian dollar, right? And so that's how I have an increased edge, because I know these fundamental news that's coming out every single week or month is going to push prices in my long-term direction of where I see price going. And this will impact the day traders and scalpers for the day, okay? Yes, you might not be too concerned about where prices are in a month. All you care about is what prices are doing over the next hour or 2 hours. But it's news like this that drives it. Like we talked about the Donald Trump tariffs. In a market condition like this where it's just falling, and you're aware of Donald Trump coming out and saying, look, he's introducing tariffs, he's threatening tariffs, well, that's not a good thing. Why are you trying to buy this thing? You need to be flipping your script in your head saying, look, I gotta be selling this thing, or hands off, right? So you understand this type of stuff, right? I think it's starting to click. Now, one of the best things that you guys can do is, I always tell people, zerohedge.com, they produce 4 articles every single day, one during the pre-market for the Asian, one during the pre-market for the London, and one during the pre-market for the New York session. And they give you a recap of everything that happened in the previous sessions. And so this is a good read on kind of what prices are doing for the day, what it did during the previous sessions. And they also give you a recap. So this right here is the market recap for the day. And this will recap everything that happened in the last 24 hours. It will give you an outlook on the earnings reports that came out, potential tariff threats, what happened in crude oil, what happened in gold, what happened in the dollar, why it moved. And so it's not like a 30-minute read or anything like that. It's a quick read. It'll take you 15 minutes. It's something that you should be doing every single day in the market, is reading 1 to 2 of these articles. Make sure at least read the market recap. That's what I guaranteed. I read the market recap. It's a very good read, okay? And you can find that by Zero Hedge. It has this logo every single time, how you see this new squawk with the redness. They have some great articles in here that I recommend reading and take an interest in reading, because this is what you're gonna do as a trader. But this is one of the best ones. It happens 4 times a day. And try to read this. This is what the image looks like every single time for the Asian, the London, and the New York session and the market recap. Some people might talk about, well, can I chat GPT it? You can, but I would always encourage people doing their own research and taking an interest in reading this type of stuff, and not just Googling or chat GPTing what is the forecast for the USD for the next 2 years and then selling it. You need to understand it's a different belief system when you are, invested into what's going on globally around the world, right? And this is what we try to do in the Moneyball trading program, is we try to create consistently profitable traders with a positive edge, right? And using a combination of these things, of technical, sentiment, fundamentals, and the personal edge. We didn't even talk about personal edge, but building a trading plan based around your own strengths and weaknesses as a trader, using discretion and using your own strengths and weaknesses. And so this is why the whole goal is to create consistently profitable traders. If you guys wanted to join that, I would love to work with you guys directly. I'll leave a description in there for you guys to join. So I'm going to end it here. If you guys would like to learn more about the COT and sentiment, it's a great video to watch. I will have that above my head right now. You could always reach out to me on social media at Moneyball Austin, Facebook, Twitter, Instagram. I appreciate if you guys like the video, and I will see you guys in the next one. Cheers. Bye-bye.